FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Well, Janet Yellen firmly at the helm of the Fed. Her first FOMC meeting, for those of you not in the know, Federal Open Market Committee. And what did she have to say? Well, it's now Peter Grandich time. Peter, welcome.
Always a pleasure to speak to you, my friend.
Right, so she had a lot to say about a lot of things, and I think we got to go get out the old Alan Greenspeak manual, don't you?
Yeah, there's no question. I mean, it had to be what I viewed as one of the most vague statements from the Fed in a long, long time. More like you said, Alan Greenspan used to be. But I felt that in many instances, she was even more blunt than Al Bernanke, who was far more blunt than Greenspan, who never really told the truth. I thought always just double talking. And her one comment midway through about what was quickly perceived as a comment that suggested they may tighten sooner than the market had priced in, really sold the market off. The spin doctors, I'm sure now that she's had a chance to be done, and the happy people on Wall Street, being told to buy. But it was a dramatic difference, which I would be a betting man over the next coming days, and with the weekend to work on it, you'll start to hear reports of different Fed governors responding to that issue over the coming days to try to lighten that blow. But that was, I think, the last time you're going to see her blunt. I'm sure she's going to be, I don't want to say counseled because she's in charge, but I'm sure people are going to suggest that she watch a few Alan Greenspan speeches before she does the next one.
So what do you think, though? She's talking about the taper and only $55 billion per month, and nobody's buying the U.S.'s debt. So how does that work? I don't understand. Who's going to buy the debt?
We've been saying that for a long time. When the talk of the taper, and as we've gone through it, who's going to replace? First of all, if we just take a step back and we look what's happening around the world and all, I asked this question to a very good liberal friend of mine. Do you really think the United States is viewed better now than they were 5, 10, 20, or 30 years by most people in the world? And I'd say there's no way. I don't think we have as many allies as we did. I don't think we have as many people believe in our country's ability to operate. And I'm not even talking politically. I'm just talking from a fiscal. So who's going to, if the Fed, who's been as much as 80 to 90% of the buying, because what Americans and seemingly the don't worry, be happy crowd would like people to forget is we still run a deficit. So we have to borrow money. That's the only way we can continue going. And we haven't been borrowing it from anybody. We've been creating it out of thin air. The Fed has been the bulk of it. So if they do taper and continue to do, and there's really no reason to suggest people are going to step up, unless, of course, interest rates go dramatically higher, then people may be willing to take the risk that they now perceive the government has because they're being rewarded with a much higher interest rate. But how anybody expects that this will just continue and this ends happy is foolish. That's one of the main reasons that, I just decided to put on the big bear hat this year and say that, this is going to stop, and it's not going to be pretty when it stops.
Yeah, so they've got to print money because there's no other way. Now, you could say that because they printed up so much money and bought so much debt in the beginning of this whole quantitative easing, that they're sitting on a pile of it now so they can afford to pretend that they're tapering now, or tapering, I should say, right?
Here's the problem. We have a prime example of what the road we can be going down, and it's Japan. Japan has been doing what we've been doing for over 2 decades. We've only been doing it a few years. The only difference which kept them a little bit better, actually a lot better off, is they were still net savers. People in the country still had a lot of their own money, even though the country itself got into a lot of debt. We're not in that situation. Okay, we don't have that ability. If there really comes a point in time when people fear that the United States truly doesn't have an ability to pay it back, or is going to have much more difficult times, and therefore I need to take a higher risk, you have to pay me a higher interest rate to return. It's not like suddenly that the world's going to beat a path to our doors, or Americans themselves are going to be able to support that deficit. This is truly funny money. This is why inevitably, and I'm going to suspect that you and I are in the same camp, that inevitably this role will be reversed, just as it's been in Japan. Japan tried ending quantitative easing several times over the last couple of decades, and things slow down and things get really bad, and pressures come on them, and they go back into easing. And one other thing before I forget in this conversation that I think is absolutely critical about today's talk, and I got to give her the respect that it's only her first, and so might have been left out for that. But unlike her two people before her who made it just done it as lip service, there was no mention in the Fed anywhere about the political paralysis in the U.S. and the inability of fiscal management. You know, everybody has gotten to the point where the Fed is everything, and it's not. I deal in the business world. I have a business that deals with businesses from small mom and pops up to fairly large, and deal with CEOs of very large corporations. And they'll tell you they're not concerned whether interest rates are 1% or 3% to help their business. What's stifling them is a whole variety of things that come out politically and fiscally. Medical, Obamacare, regulations, people's inability to fulfill high jobs because there isn't an availability of Americans to fill those jobs. I mean, there's a whole variety of things that go past what the Fed has in its control or ability to inspect. But the market is all come focused that as long as the Fed is on our side, everything is hunky-dory. And nothing could be further from the truth. And that will be the eventual demise of that. And once that happens, once the Fed would have to go from tapering to even raising rates to then reversing, then they will get the same opinion that Japan ended up getting, that they went from in front of the curve to behind the curve.
And that will be a scary day, won't it?
Of course it will be. And I believe that's why things like gold started to recover again. That's why the U.S. dollar has not rallied. Remember, we used to always hear, you and I are old enough to remember, the U.S. dollar, the ultimate safe haven, and this and that. The dollar's at its lowest levels it's been in years on average. Certain people who start to see before most recognize that. That's why there's been a great movement among the real wealthy to take money out of U.S. And move it elsewhere. It's just a house of cards. I don't know what day it'll be, and I think you and I are still fairly young enough that we'll be here, unfortunately, to see that day. But when that day comes, there'll be just like you saw in Europe and in other places. There'll be screaming in the streets and people who recognize that things are going to get real harsh, and they don't want it to become harsh for them, and the government will cave. Austerity never works until ultimately it's so bad, like a depression, where it's universal versus everybody except the ultimate rich. And that's why people back in 2008, myself and some others, felt that was the time we needed to take our medicine. It was appropriate, and we would have been through even maybe a depression, but it would have given us a chance. And instead, what did we do? We added trillions of dollars or more debt, and we're not in any way better off. I said politically we're not better off. We're not better off fiscally. And monetary, we're pushing on a string. I mean, what are they going to do? Make it go below, zero? I mean, it's just we're at the end of the rope. We're at, like I like to describe, if you were watching a machinery where it has that little red danger zone, that if it gets to that level, something bad can happen. We're in that red zone, but you could be in that red zone for a while, and even more to the point where it has to get almost to the end of it before it explodes. But we're in that phase right now.
You know what it's like, Peter? It's like in your car, the check engine light goes on. And usually that check engine light goes on and you said, doesn't mean anything. The car's still running. And you run with that check engine light and you run with it. And there's really something wrong with your car because that light doesn't go on for no reason. And a few thousand miles later, you've ignored it, maybe 10,000 miles later. And then all of a sudden, the car just stops running. That check engine light went on in 1971 when they took the U.S. off the final vestiges of the gold standard, when Nixon closed the gold window, and that was the end of it. And man, we've been running on that check engine light for 43 years, and Janet Yellen can say, whatever she wants to say, but there's really no saving that car now, is there?
No, and we've seen, the typical things that happen around this. We saw yesterday, as I suspected, as I told my readers the other day, that we're going to see consolidation and a correction in the gold market. It's so atypical. You and I have probably had this conversation a dozen times over the last few years. The market gets a good physical buying worldwide. The paper market has to follow it. Large speculators flood into the market. They love that. The guys and gals at the Crimex, or properly called the Comex, they set them up, and then they use things. There used to be the employment, and it's always around the Fed meetings to just slam them. We get this washout. We go through it. I think the last 5 interviews you and I did, 3 of them were around these periods, and we were all talking about a $25 or $30 down date. And both of us said then, and I'm certainly going to say now, come a week later and most, if not all, the loss will be made up, and we'll be moving up again. And it's just unfortunately more of the same. And the one thing that I believe, I'll say this: I believe Greenspan was a BSer. That's my personal opinion. Mm-hmm. I believe Bernanke and her really believe in what they think. I mean, they're serious. They think they're doing right. They want to do a good job, et cetera, et cetera, et cetera. But they have not grasped, nor as I remember in the latter part of the conference, someone asked, well, how do you guys figure out what's happening to the average person? And she said, well, we have people come in and they tell us and all. They don't know where. Somebody joked on one of the shows, I doubt she does her own shopping. She doesn't know where food prices, are and those type of things. But I believe there's been a sincerity, at least in Bernanke and her part, that they think they were doing the right thing. But at the end of the day, it goes back to something very simple. You and I have had this conversation. We have gone beyond the point where we can continue to run our country and our household without paying a price. We have too much debt. We don't produce enough discretionary income. When the average American is done paying all his and her bills and everything they need for average life, it's not going to have an excess of money that the government can tax us so they can pay back that debt. Because remember, that's the only other way other than monetizing it is to take money from its people and use that money to pay back from when we borrow from. And the politicians are not about to do it. That's why we've had 270, whatever the number is, of deficit raising reduction, the capping of how much we're going to borrow. And it's just getting to the point where the can eventually gets so heavy, and no matter how much you try, you can't kick it down again. And that's where we're getting to the point. And no one individual can change that, and no one organization, particularly the Fed, can inevitably prevent that. And so it's only a matter of when, not if. And people don't like hearing it, Kerry. I have to tell you, I work in what I like to call the real world. I have a business where I'm in the regular world, and most people, even after I'm done speaking and they hear this tone that I invoked in this new year, they say, I believe in you, but I hope you're wrong, and I'm not going to act that way because I just got to hope, it's not going to get that bad. And it's kind of foolish and it's scary, but that's how most people are. Look, I'm running my mouth here, but I want to make another one point. Most Americans don't even realize that almost 85% of Americans don't even have $25,000 saved for their retirement. How about this statistic? The Social Security Administration said only 8% of Americans outside of their home have $100,000 saved. Now, 10, 15, 20 years ago, they used to use the number you need $1 million to retire, okay, comfortably. I'm sure that number, and I can tell you it's dramatically higher than that. So who's fooling who? At the end of the day, most people are not going to be able to live the dream and all that being sold to them and so forth and so on. Now, we had a news this week. This is another subject. I'm running my mind here, Kerry. I'm so frustrated.
That's okay.
We had this organization come out, these agri-government organization that's going public, and they had to disclose their books because they had to do their filing for the IPO. And it showed out that in the last 4 years, they never had a day losing trading. Now, I'm going to tell you something.
They're geniuses. They're geniuses.
Yes.
They're geniuses, Peter.
So what do we still have? We have the general public, friends, business people. I plead, you can't trade. You can't beat this market. There's too many people with better information, faster services, and have advantage of things that you can't even begin to use. And you want to sit there in front of a computer and think you could be the market trading. And so what's happened is there's a very small amount of people who are making very good money. And the middle class that used to be the big bulk, which was really the glue that kept the poor enough that they could get by and you can help them, and the rich made enough off the middle class, but not to the point where it shrunk the middle class a lot. That middle class it's getting smaller and smaller, and most are falling lower. They're not moving up higher. And eventually what happens, and civilization has shown this for a few thousand years, it gets overburdened. It can't continue. You get somebody like this man that's come in that had no experience. I mean, Obama, I got so hammered when he was elected, and I just kept saying to people, forget, it's not race or anything. The man hasn't run anything. What has the guy done for a living? You want to put him in charge and be the guy that's supposed to be in charge of the whole world? And he really had no experience. And he also brought a socialist-type mentality. Well, that's what we're going to see more and more of. And unless there's a dramatic change in America and there's a groundswell, people are going to demand that the government do more, and the government's going to try to take more and more from the people it can. The very rich get to exclude it because they can escape it in a lot of ways. And so the middle class is basically being destroyed. And I'll close with this. And it's a terrible thing to say, and I had to say it in a speech the other day with my daughter sitting in the audience, and that was, the next generation will be the first generation since America became its own country that'll be less off than better off than the previous generation.
Yeah, it's very sad to say, but I'm inclined to think you're right, Peter. And really, what can you do now to protect yourself, Peter? What is the solution for you if you still have some resources left?
Well, first thing I always tell people here, and again, I still sit down, and again, I don't do the micro processing of the planning that we do down here. I'm the macro guy. I'm the big picture. But one of the things that both the macro and the micro guys agree on is we still find people with large quantities of debt. It's kind of silly. You're going to try to invest somewhere or buy a bond that's paying 3%, and meanwhile you're paying your credit card 6, 8, or 12% or some loan. First thing is people can work on is reducing their debt. Both Jews and Christians base their beliefs on the Old Testament, and both in the Old Testament and in the New, God spoke about not one positive word about debt, and it's played out. We've seen what it's done to people. So spiritually or secular-wise, first thing to try to do is to reduce your debt. The second thing you got to recognize, and I think this is kind of important, is if the United States continues to erode as it has, and we've seen this already transpire, and I think what Putin is doing is he's made that conclusion, and that's why he felt he can go and do what he did, and he's been successful at it. Eventually, we'll lose some of the pluses we had as being a reserve currency and a credited nation and all that type of stuff. So the values of our financial assets, and particularly our currency, could erode dramatically. So I like to say to people that if you're past and you have some money, you need to consider perhaps having money outside of U.S. financial assets. I myself, I continue and will continue to put money in the Canadian currency simply because Canada, in my mind, can fend for itself and has enough water, enough food, enough energy, and all that type of stuff. But I'm not telling everybody to just trade the Canadian loan, but I legally, and I report it as I'm required to in the Treasury and all, keep money. But I think the big home run place, and again, the financial world and most of the journalists that follow it hate it, and they hate it for good reason because they know it's the exact opposite of financial assets. But you got to come back to gold. There's just no way around it. You have to come back to the ownership of gold. No disrespect to the people like Bitcoin and all this stuff, but this is the one thing that's been counted on since man started with paper and stuff, gold. And right now, despite which we always know, we always get the whackings. It's attractively priced. It should work its way higher. And owning the physical part of it is, particularly if there's a large amount of dollars you're talking about, is paramount to having.
Yeah. Well, I couldn't have said it better and more eloquently myself, Peter. I'm totally in agreement with you there. And yeah, these raids, predictable, especially, I didn't really look at my calendar, but let's face it, it's the ladies' first FOMC meeting. Okay. Of course they're going to slam gold. There's no question they're going to slam it. And in fact, wouldn't you have been shocked, Peter, if they didn't slam it?
Well, they've lost being able to do that around the release of the employment number, but they've always been able to do it around these meetings because there's still this era that, okay, interest rates are going to go higher, the Fed tapers. The only reason gold rallied those last 12 years is because interest rates were going lower and lower, and so that's the perceived notion. The problem is, and again, in the paper market where most of this damage is done, is it becomes a self-fulfilling prophecy because just as you and I know this, all the traders know that. So they kind of step out of the way. They let the speculators come in. They get crushed. They see it get crushed. They start buying at the bottom of these things, which I suspect today and tonight's trading we're going to see. And we're sitting at $13.29. And if you took my daughter right now and said the next $100, is it up or down? I know it's up from here. But can I go to $13.08 or $12.90 before I go to 14 something? Yeah. But we continue to see the great demand in the physical market. That's always been the key. And before we run out of time, I just want to stress that again. We've had this talk about in past things when people supposed to be getting out, you can't find the buyer. When gold was getting crushed, which we know were for reasons to create a false sense of large selling because there's a big paper short out there, and they needed to cover because there isn't gold where it's supposed to be. And by the way, this news that keeps coming out of Europe, more and more investigations, and they're going deeper and deeper. We might have finally found the smoking gun, but we can talk about that another day. But while the paper market was declining, people were getting online to buy gold. And that was the anomaly that told us that the paper market move was wrong, down. And now the paper market can get the market down, but it can only get it down now for sometimes hours and no more than a couple of days, no longer weeks and months. And so I fully suspect that a week from now, or no more than 3 weeks from now, whatever loss we had in this raid up until this conference will have been made up.
Yep, probably so. And don't forget, Asia's still buying it like it's nobody's business. That's the other thing that never existed up until recently. Let's not forget that. And hey, it wouldn't be a complete interview without talking about what's going on in the Asian market, especially China. Man, their paper market appears to be imploding pretty quickly there. They've made all the mistakes that the U.S. has made with printing money and doing all that good stuff, haven't they?
Yeah, and one of the main factors when I talked about, particularly when I said go short a few weeks ago, was that I had, after almost probably 2 decades of being a China bull, even through 2008, I remained a China bull, that I was no longer, that there are serious issues there. I don't think they'll have a severity to the level that we saw, but the expectation that they can just keep carrying the world and that they were going to still have 9 to 10% growth, I thought was an erroneous, and there would be a decline there, and it's happening. And so that's another thing that's not being taken into the U.S. stock and bond market, of how they were, in a sense, carrying us. They did the hard work while we, just printed money and a small amount of people benefited from it. That's taken out. That part of the punch bowl is gone. And again, like I said, so we don't have economic strength around the world, people that are supporting us. We don't certainly have political. I think Obama has been shown to be, let's put it this way, I think the only guy in the world that's happy right now is Jimmy Carter, because I don't think people will say Jimmy Carter's the worst president.
Yeah.
He at least, when the Iranian stuff started, he got tough. I mean, this was foolhardy how Obama acted in this, naming 9 guys that can't come into the country and all this type of stuff. Ukraine asks us for help, and we tell them we can't send them any arms because we believe that's going to make the situation worse. I mean, look, this conversation go on and on, Kerry. The bottom line is this. The bottom line is that we are worse off now, I think substantially worse off than the last financial crisis. We'll have less means to try to fix the inevitable blow up in this next crisis, and most Americans are as worse, if not worse off, prepared for it than they were for the last one.
Great points, Peter. It's always a pleasure to have you on the show. Can't thank you enough for being here. Hey, give us your website, where we find your work. Indispensable reading.
Sure. One word, moneytalks.net, moneytalks.net, and you look under Peter's content, and my blog is there, and it's totally free.
All right, Peter. And, of course, always a link to Peter's site, financialsurvivalnetwork.com. Sign up now. Newsletter going out in the next day or so. As soon as I finish it, I've been swamped doing these interviews. I haven't wanted to miss one lately. So financialsurvivalnetwork.com. Sign up. You want to read the next newsletter. I promise you. Peter, thanks so much. Talk to you again soon.
Thank you, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.